Okay, hi everyone, welcome to today's webinar. So for today's session, we're going to be talking about the second part of our fundamental trading strategy. If you weren't here for the first one, I have a really brief recap on the first part of the series that we did last week. But yeah, so we're going to start off with that. We're going to give about 2 more minutes to let more people join the session before we get started. So in the meantime, feel free to grab yourselves a drink, make yourselves comfortable. Let me know if you guys can see me and hear me clearly as well. And yeah, I'll see you guys in about 2 more minutes. Thanks, everyone. So for today's session, we're going to be talking about the second part of our fundamental trading strategy series. Obviously, before we get started, a risk warning and disclaimer as usual. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. The material is just the personal opinion of the author, and the client's objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here is our agenda for today. We're going to do a really quick recap on what we went through last week. Last week was pretty heavy, so we went through a lot of things. But I'm just going to do a really quick recap on the fundamental part of it. And then we'll look at central banks, employment report, gold versus real rates. Okay, so last week we went through some key news events and what exactly they mean. Oh, wait. Okay. So we looked at what it means to use an economic calendar. Firstly, how we like to use it is by filtering out only the red and orange icons. This is Forex Factory, by the way. But basically, by filtering out only the red and orange icons, we are only looking at the medium to high impact news events. Using an economic calendar also allows us to compare actual and forecasted data to determine the outlook of the news releases. Okay, let me just show you guys the Forex Factory website. So when you go into Forex Factory, this is what it'll look like. Okay, this is what it will look like. You can go to today's date. When you click on the date, we typically will look at the weekly forecast, or rather the weekly events. So for example, for this week, we're looking at 29th to 3rd May, apply settings. And you can see I already have it filtered to look at the medium and high impact events indicated with these icons. But if you click on this green filter here, you can see that we'll be able to look at the low impact and any bank holidays as well. Click on apply filter and all of the events for the week will be shown. So apart from, of course, the impact, the currencies that you're looking at, bank holidays, as well as the data types or event types, you can also look at the forecasted values as well as the previous values. And then once the data is released, they will let you know of the actual data as well. So it's really easy to see at one glance all of the important economic information. And you can also filter or customize the website however you like by looking at specific currencies that you're trading or the different event types that you are interested in. Okay, so if we look at this week's events, on Monday we had um German and Spanish CPI data. So obviously that would have impacted the euro. Tuesday we looked at ANZ business confidence, Australia's retail sales, Chinese PMI data, Euro's flash core CPI flash estimates, Canadian GDP data, and the US employment data and Chicago PMI. And then for Wednesday, today we looked at CB consumer confidence in the US, Kiwi employment data, and then later today we have US employment change and manufacturing PMI. So I would say we have US data, mostly employment and manufacturing data. And we also have a FOMC statement coming out, and Canadian Bank of Canada Gov Macklem speaks. Swiss franc CPI, US unemployment claims. And on Friday we have US employment data again, average hourly earnings, non-farm employment change, and unemployment rate. And of course, the final services PMI as well. So that's for this week. Okay. So what exactly is, I already went through this. It allows you to see at one glance all important economic data releases. So on the left here, we have another example, investing.com, which is pretty much the same thing. Forex Factory is just the one that we typically prefer to use. It shows you key events such as GDP, CPI, NFP, crude oil inventories, and even central banks' monetary policy meetings. So we went through what a couple of these high impact events mean. So FOMC meetings are Federal Open Market Committee meetings, and it's the US Fed's way of communicating their view on monetary policies. The Fed interest rate decision normally comes together with these FOMC meetings. If the Fed is dovish, the USD is bearish, and if the Fed is hawkish, the USD is bullish. If interest rate goes up, USD is bullish. If interest rate goes down, USD is bearish. Okay, NFP is non-farm payroll, and it measures the change in citizens that are employed from the previous month, excluding the farming industry. Unemployment rate measures the total unemployment of workforce that is seeking active employment from the previous month. Okay, crude oil inventories measures the weekly change in the amount of crude held by US firms. If crude inventories increase, we can expect oil prices to drop. EIA, Energy Information Admin, is a short-term outlook. The monthly forecast for the year ahead demand and prices across major field types. Okay, some benefits of using an FX calendar. So depending on your individual trading style, as you saw earlier, you can look at the calendar to filter what dates you're looking at. So if you want a monthly forecast, you can also look at the monthly data, or daily, weekly, monthly, so on and so forth. So it helps you to plan your trades and allocations for the day, week, or month ahead. And it helps alert the individual to upcoming important news that may affect volatility, which is why we typically will look at the medium to high impact events based off of its effect on the charts. Okay, so using news events to look at your charts, or rather seeing how news events will affect your charts. So we have US unemployment claims that happen at 12:30 p.m. GMT every Thursday, and we also have central bank interest rate decisions. Okay, so if we look at this was 15th June of last year. So at 12:30, we had an unemployment claim data release over here that we've highlighted here at the vertical line. can see the steady drop below this support level. If we look at MACD, which is a momentum indicator, it also gives us a very bearish momentum immediately after the release of the results. Okay, so this is for DXY. Since unemployment claims are a US data, are US data, and we look at gold, you can see price moving upwards on the same time. So typically DXY and gold are inversely correlated as well. I'll show you guys in a little bit how you can use TradingView to spot any correlations between different charts. But basically, DXY and gold are generally negatively correlated. So you see here, on that day, DXY dropped, gold shot up significantly. If we look at a FOMC meeting on the 14th of June last year, we see price shoot upwards as well on that day at that time. Once price was released, it shot upwards. This is DXY. And you see for gold, it's dropping as well. It actually dropped below this support level. Okay. Same thing. On the 12th of October, 12:30 p.m., unemployment claims data was released. So you can see price shoot up for our DXY. This is on a 30-minute time frame. So all of these are on pretty short time frames. We're looking at from 1 hour to 30-minute time frames. We typically will not go below 30 minutes, or maybe even 15 minutes, just because once your time frames are so low, it gets a bit messy, a bit difficult to analyze your charts. So yeah, so DXY we saw a shoot up in price, whereas on our euro dollar, we see price steadily drop over here. Okay, so this is how you take note of the data releases, the times, in order to adjust your charts accordingly. Okay, the reason for this is because if we look at the bottom here, right, US unemployment claims actually it decreased. So the forecasted was 211K, and the actual data released was less than the forecasted values. So if we look back here, unemployment claims go up for DXY and euro dollar is shot down. Okay, so now let's take a look at our charts. Okay, let me just pull out my trading view really quickly. Okay. Oh, okay, we have a question. Is there a specific type of data release which has the biggest impact on market sentiment, changing direction of the market? So, yes, there are a couple of economic data releases that impact the market a bit more. So from here, if we look at our Forex factory, those would definitely be our red icons, just to make things really easy. But mainly, NFP that we went through earlier on employment data, mainly. You can see here CPI, which is your consumer price index, or PPI as well, producer price index. Your GDP, what else? GDP, central bank policy announcements. So like your FOMC meetings. Retail sales might have an impact as well because it provides insights into consumer spending trends, which are typically key drivers of economic growth. So that's why we take note of those as well. Um, did I say employment rate already? I think so. NFP and employment rates as well, like you see over here, the red icons, and trade balance as well. Because trade balance data basically measures the difference between the country's exports and the imports. So if there is a widening trade deficit in your actual data release, that might cause concerns about the strength of the domestic economy, which can then impact your market sentiment. Okay, I hope that answers your question. That basically everything that I mentioned just refers back to the orange and red icons on your Forex Factory, which makes life a lot easier. Okay. Um, what was I gonna do? Oh yes, my charts. So if we look at our DXY first, I talked about wait, let me just I talked a bit about looking at the correlation between DXY and gold on TradingView. So let's go ahead and I want to show you guys how you can do that now. So um on your trading view, you can actually click on this plus sign and compare gold on the same scale. Okay, wait. Plus sign and same percentage scale. Okay, and you can see where price is increasing, we are seeing gold drop. Okay, it's um negatively correlated, but not as of right now, it's not very closely correlated. We have webinars on correlation as well, but I'm just gonna quickly go through, just gonna show you guys something you can use since we're talking about correlation. So if you go onto myfxbook.com, um, this is what it look like. You can compare the different Forex currencies. So we typically will look for currencies with correlation um, lower than -80 and more than 80%. Okay. And your time frame depends on your trading strategy, of course. Uh, if I look at 4 hours, yeah, so it highlights to you those values that are more positively or negatively correlated. So if we look at DXY and gold, like we have here, you can see it's not super similar. But you can see that price increase, when there's a price increase for DXY, there is an opposite effect for gold generally. Um, maybe to show you an example, let's look at AUD CAD and Euro Oz since it's -95.7, which is very negatively correlated. Okay. So Euro Oz and Oz CAD. Okay, so this is on our daily time frame. Click on this plus sign. So on the same scale, you can see it's a lot similar um, in terms of the shape compared to what we saw earlier for the DXY and gold. Okay, so this makes things a lot easier. So when you're analyzing for one currency, for example, your Euro Oz, you can pull out your Oz CAD, see how negatively correlated it is, or any other currencies. see how positively or negatively correlated, and you can apply the opposite analysis for that chart. So it saves you a bunch of time. So that's for negative correlation. If we look at a positive correlation, um, maybe AUD, Aus dollar. Yeah. Okay, so again, you see here I'm comparing Aus CAD and Aus dollar, which has a 97.1% positive correlation, which is very positively correlated. Anything that's above 80 is typically considered very positive or very negative. So you can see that the shape of the chart is very, very similar. So whatever I've analyzed for our Australian dollar will typically apply for your Australian Canadian, since it's so similar. Okay, any questions? Just wanted to bring that up since we were talking about um, correlation with DXY and gold. Um, yeah, maybe let's go ahead and analyze our Australian dollar now, since I have it out. Right. Okay, let me know if you have any questions about this. Okay, so on our weekly time frame, I like to start off by looking at the higher time frames first. So if we look at our weekly time frame, you can see prices dropping. We also have prices moving in this descending trend line over here. Okay, so what makes a valid trend line is if there are at least 3 touches. So we have 1, 2, 3 touches on our trend line. Okay, if we go back and take a look at Australia retail sales, which was released yesterday at 11:30, it was actually a lot less than what was forecasted. So let's see if that impacted our charts in any way. If we look at our 1 hour time frame. Okay, yesterday 11:30. Okay, I'm just now realizing my time zones are different. So on my trading view, my time zone is 2 hours behind. So this is 11:30, so this would be 9:30. So if we look over here, on 9:30 would be about somewhere here. Okay, so you see price steadily dropping after the announcement, which was way less than what was forecasted for retail sales. Okay, this is on our 30-minute time frame. I normally don't analyze on our 30-minute or 1 hour time frames. So let's go back to our daily time frames. Okay, so on our daily time frame, again, we have prices moving in this descending trend line. Let's see if we have a channel. Okay, no. Um, Okay, we do have a bit of a descending trend channel here as well. So for a valid trend channel, it's valid only if there are two touches at least on top and two touches at least on the bottom. Okay, I'm gonna go in with our support and resistance levels now. So my first support, I'm gonna place my pivot here. First resistance up here. And a good habit is to try and pull back your horizontal levels to see how far back you can go without cutting too many bodies of candlesticks. So for example, the reason why I'm stopping here, and not, bringing it all the way back, maybe here, is because over here, it's way too messy. It's cutting too many bodies of the candlesticks. Whereas here, I'm just cutting the wick, which is fine. Okay. Okay, so, and then my first support, I'm just going to place it all the way down here. Okay, so now that we have that, we're going to go in with our Fibonacci levels. Okay, so Fibonacci 78.6 lines up with this intermediate level. So it's a swing high, and it's also in line with this level, which is why I'm taking note of it. Okay, so even though the 61.8 does line up with our pivot, we can't use it since price has already broken out of that level. Okay, so here's our trend line. If you can't really see it, it's rebounding off of our 78.6, whereas our 61.8, it has already broken out. So I'm just gonna keep our 78. Okay, now going in with our projections. Again, our 61.8 also lines up with this intermediate level. So I'm highlighting it because when you have two or more Fibonacci levels lining up, it's a confluence area, Fibonacci confluence area. And basically prices are attracted to this area, but might not break out of it. Okay, so we're gonna see if there's enough bearish momentum over here to push past this support level. Um, Here you can see my 100% and my 78.6. Yeah, line up with my first support and also my intermediate level. Okay, so the levels that we are looking at here, um, is basically a projection. So for projections, we look for this kind of a lightning bolt shape. So something like this, a flash kind of symbol. Okay, and yeah, so I'm expecting price to continue from our pivot towards our intermediate support and maybe even to our first support because we have quite a bit of bearish momentum here. Now let's look at some indicators. So I like to start off with MACD and Ichimoku because at first glance you see exactly what your signals are. So price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD, on the other hand, is giving us a bit of a bullish signal, so it doesn't support our analysis. if we look at moving averages, okay, you see prices recently crossing below price, which is a um, bearish signal as well. And yep, that's for our Australian dollar. Okay. Okay. Do you guys have any requests that you want to see? If not, let's look at DXY. Okay, wait. Let's do a bit of a comparison with what we looked at earlier. Okay, so if you were interested in trading the AusCat, you can just go ahead and copy the same, pretty much the same analysis for your Aus dollar. Okay. Okay, let's look at yeah, pound yen. Okay, so again, let's see if we have any correlation between pound yen. Okay, we see this 96.9 with our euro yen. So let's take a look at that. Okay, you can see it's almost identical. Um, yeah. So whatever we are doing for pound yen might be applicable for euro yen as well. Okay, anyway, on our weekly time frame, prices are moving upwards in this uptrend, right? Um, on our daily time frame, you can see prices kind of testing this resistance level. So that's going to be my first resistance. Here is going to be my first on my pivot and my first support. Maybe here. Um, okay, so I'm gonna go in with some Fibonacci levels now. Okay, so my projection, my 78.6 lines up with my first resistance. And you can see this kind of flash shape here. Okay. And then for my retracement, just gonna take it from here to here. And my 23.6. Okay, actually I'm gonna place my pivot below here instead. Okay, in line with the 38.2. So we're expecting prices to continue in this uptrend. Okay, we typically would recommend to follow the direction of trend unless there is a very clear signal that prices are changing. Okay, over here we have an ascending trend line as well. Okay, now let's look at some indicators. Ichimoku MACD. Both are giving us bullish signals. If we look at Bollinger Bands, price is pushing above the upper band, which is also a bullish signal. Okay, so yep. So going for a buy from our pivot towards our first resistance. Okay. And then gold. Okay, so on our weekly time frame, again, it's pretty bullish. Okay, we have prices moving. This is not a valid trend line, but you can see prices moving in an uptrend. On our daily time frame, also pretty bullish. Okay, and we see prices testing this level here, this resistance level. I'll place my pivot. Over here. Okay, this is my pivot, and my first support is, I'm just going to place it at this overlap level. Okay, now going in with our Fibonacci levels. Okay, my 61.8 lines up with my first support. Mm, okay, I think that's all the levels that we have. So now going in with our Fibonacci, or rather our indicators. Okay, price is moving above the Ichimoku cloud. MACD is giving us a bearish signal. So let's go ahead and look at some other indicators. Okay, Bollinger Bands. Price is currently testing that bottom band of the Bollinger Band, so we have yet to see if it's gonna peak out. So I'm gonna hide that first. Price is moving below our moving averages, which is a bearish signal. Okay, so we're expecting prices to continue to drop towards our first support. Okay, if we look at maybe RSI, stochastic. Okay, same thing. We see prices are currently testing this resistance level. Okay, so between this level and this peak here, price made a higher high, whereas here it's a resistance level. Okay, and we can see price subsequently drop after that. So expecting it to continue to drop. Because in the past, when it happened over here as well, and here, okay, price made a higher high and then subsequently dropped as well. Okay, so this is what we call a hidden resistance, and we use it for stochastic or RSI. Okay, that's for gold. Let's compare our DXY. Okay, it's not very similar here. Okay, now let's look at DXY. So on our weekly time frame, it's pretty kind of ranging. On our daily time frame as well, we don't really have any specific trends. Let's see. Okay, we have an ascending trend line or trend channel. Okay, now going in with our horizontal levels. This is my pivot, and then this is my resistance and my first support over here. Okay, now going in with our Fibonacci levels again. Okay, you see price the 78.6 lining up with our pivot. Okay, my 161.8 also lines up with my pivot. So for the values that are greater than 100, so 161, 127.2 as well, we are looking for this Nike tip kind of shape. So something like that. Okay, that's what we call a Fibonacci extension. And then so I have price currently testing this pivot level here. Okay, because we have two Fibonacci confluence levels that line up. I have a 38.2 retracement that lines up with my first support. Okay, my 100% also lines up with this pivot. So again, that shape that I'm looking at is like this, like a lightning bolt shape. And it's currently testing this 100%. Okay. So yeah, I'm expecting prices to bounce off and hit towards my first support, still within this ascending trend channel. But yeah, because I don't think price. Okay, let's look at some indicators first. Okay, so price is moving above the Ichimoku cloud. MACD is giving us a bearish signal. Okay, so we're seeing if the momentum is strong enough to push price beyond this strong confluence area. So let's look at more indicators. Bollinger Bands isn't telling us much right now. Let's look at RSI and stochastic. Okay, stochastic, we have that same hidden resistance level that's giving me a bearish signal. Okay, with price pushing upwards. With price moving in upwards, but then it giving us a resistance level here. Okay, so I'm expecting it to drop. Okay, that's for GXY. If we look at the most recent consumer confidence was the most recent data release, and it turned out less than forecasted. This was at 12 a.m., which would be 10 p.m. last night. 10 p.m. Tuesday. Okay, this is on daily time frame, so it's a bit difficult to see. But if I zoom in to 30-minute time frame, okay, it's over here. See price steadily increase. Okay, any questions? Okay, maybe before you guys go, in case there were any questions on what exactly I'm doing with my Fibonacci levels, you can take a look at this website. It's just theforexarmy.com. And it's a pretty in-depth guide for beginners on how to use Fibonacci and the different techniques that we use, what to look out for, some guidelines. So I do try to draw out the shapes that we are looking at, like over here, when I'm doing my live analysis. But if you're still a bit confused, you can go ahead and take a look at this website as well. I think the most important thing to note would be the confluence areas that I talked about. I do try to highlight the areas that I have identified as a confluence area. But if you're confused what exactly I'm doing, you can go ahead and take a look at this website as well. Completely free to use as well. Yeah, if there are no other questions, that's all from me for today. Thank you guys so much for joining me. I hope you guys found the session helpful. Have a great rest of your week, and I'll see you guys again next week. Thanks, everyone. Bye. Oh, yes, if you guys